Welcome to the Chrisman Commentary, daily mortgage news podcast. I'm your host, Robbie Chrisman. Topics on today's episode include the latest and greatest technology out there, my interview with Finance of America's Kris Buglino on reverse mortgages and how they're being re-engineered for the next generation of clients, and reaction to the Fed's rate cut and statement from yesterday. You know, Optimal Blue is the only end-to-end capital markets platform built to power performance, precision, and profitability. Their cloud-native API, First Technology, connects the primary and secondary mortgage markets, helping lenders of all sizes operate more efficiently, manage risk more effectively, and maximize results. Optimal Blue. Modern technology, proven results. Are you ready to change the time on your car's clock this weekend, or leave it and let it be right again on March 8th, 2026? Some technology is cool. Every lender and title company knows that cyber criminals don't take breaks, and neither do data breaches. The TransUnion breach exposed the personal details of over 4.4 million Americans. If your information was among them, your identity could already be at risk. Bank hacking incidents have doubled since 2023. So do you care when cyber attacks happen, or just shrug and hope your IT department is on the ball? In earning news, Freddie Mac reported a net income of $2.8 billion for the third quarter of 2025. It was down 11% year over year, primarily driven by a credit reserve build in the current period compared to a credit reserve release in the prior year period. Redwood Trust saw a record $6.8 billion of cumulative loan production across operating platforms. Capital allocated to mortgage banking was up 84% since the second quarter of 2024. In fact, Redwood delivered its highest mortgage banking revenues since the third quarter of 2021. And, as was widely anticipated, the Federal Reserve lowered the federal funds rate target range by 25 basis points to a 3.75% to 4.00% range yesterday, and announced that the balance sheet runoff, or quantitative tightening, will end on December 1st. In his press conference, Chair Powell avoided signaling whether another cut will follow in December, though the market still expects one. The economy appears to have slowed sharply in the fourth quarter of this year, but is projected to regain momentum in 2026 as fiscal and monetary policies both become more supportive. In a free market, interest rates are determined by supply and demand. The New York Fed's open market trading desk will begin rolling over all maturing Treasury principal payments at auction and reinvesting proceeds from agency securities into Treasury bills purchased on the secondary market. These rollovers will be conducted through non-competitive bids distributed proportionally across new Treasury issues. Monthly Treasury bill purchases will be divided between two bill sectors based on the relative size in the market, using a 12-month average of outstanding amounts to determine sector weights. Despite the cut in overnight rates, which was entirely expected, mortgage rates rose. Because of the uncertainty of another cut in December? Because of the reinvestment policy, buying Treasury securities instead of MBS? Some have suggested it's because prices, and thus yields, are range-bound and they haven't worsened in a while. For today's interview, I wanted to welcome onto the show Kris Buglino, Wholesale Sales Manager at Finance of America, to talk about how reverse mortgages are reshaping opportunities for lenders and borrowers alike. He's an account executive with extensive experience in the finance industry and has a background in advertising and communications, but has held various roles in companies such as Genworth Financial, U.S. Capital Group, Senior Lending Network, American Home Mortgage, and now plies his trade at Finance of America. I was actually very pleased to be invited to speak at the National Reverse Mortgage Lenders Association conference in Minneapolis last month. I had a great time. It was good seeing people, good to get a sense of the kind of climate and environment around the reverse sector. And much like other niche products, it's kind of come up here recently. People that listen to this podcast, maybe they're more familiar with non-QM or home equity products that have really had a renaissance. And I think reverse mortgages are kind of up and coming too when it comes to dispelling some of the misconceptions out there, when it comes to the public acceptance, when it comes to the potential or untapped potential. And so excited to be talking to Kris Buglino, who's Wholesale Sales Manager at Finance of America. Today, we're going to talk about how reverse mortgages are reshaping opportunities for lenders and borrowers alike. Right, Kris?
There's still a lot of misunderstandings about them. And at their core, these products are helping borrowers live a more comfortable retirement. And they're giving loan originators powerful ways to serve their clients and diversify their business.
Couldn't agree more. I kind of alluded to it. Some of these various niche lending products had gotten, uh, they've come a long ways in the PR realm, and for good reason. They are helping borrowers, and in this case, obviously, borrowers live more comfortably in retirement. Can we start by kind of comparing reverse mortgages to other home equity products out there?
Sure, that's a great place to start because a lot of folks are familiar with HELOCs, but may not understand how a reverse mortgage is different. With a HELOC, you're taking a new monthly payment, often as an adjustable, or you could be exposed to interest rate increases over time. Our Home Safe Second works very differently. Depending on the state, homeowners 55 and older can tap into their equity with a fixed rate loan, and there's no new monthly payment required, but they have the flexibility to make payments or preserve equity if they would like to. They keep their existing low rate fixed mortgage in place, which is really important in today's rate environment. Of course, the borrower must make all loan obligations, including meeting all loan obligations under the first lien mortgage, living in the property as the principal residence, and paying property charges, including property taxes, fees, and hazard insurance. The borrower must maintain the home. If the homeowner does not meet these loan obligations, then a loan will need to be repaid. Borrowers are using Home Safe Second to fund home renovations, pay off higher interest debt, cover healthcare expenses, and even help a child or grandchild with college or down payment. It gives them access to cash while preserving their low rate first mortgage. For brokers and bankers, this means you're helping clients without forcing a refinance or losing that servicing relationship. It's a solution that fits the borrower's life stage and protects your business at the same time.
I'm listening to that answer, and I think it begs the question: is there really a market for reverse? Just how big is it?
There's a huge market for reverse, bigger than most people realize. Seniors today hold about 14 trillion in home equity, and at the same time, we know there's a retirement savings shortfall in the country. Millions of Americans are living longer and facing the challenge of outliving their savings. Reverse mortgages unlock that equity in a structured way, and they're becoming part of a mainstream retirement funding solution. From the lender's perspective, this is a real business opportunity. Purchase and refinance activity has been down, and relying only on first-time home buyer volume is a risky strategy. By adding reverse, brokers and bankers are diversifying their business, stabilizing their pipelines, and building products that will keep them relevant for decades to come. This isn't a niche market anymore. It's a massive market that's here right now.
Well, how can loan originators kind of become a mortgage partner for life? I think a lot of people listening to this are probably interested in what you're saying, but might not know where to take the first step. Maybe you could also help explain the business value to originators out there.
Sure. This is one of my favorite parts of the conversation, the idea of being a borrower's partner for life. Most originators think of their role as ending when a borrower gets their last traditional mortgage, but the reality is mortgage needs don't stop at 60. In fact, that's when many borrowers start looking for new financial solutions to help them live a more comfortable lifestyle in retirement. If you've been in the business for a few years, your past client database is full of reverse eligible borrowers. These are people you already built relationships with, and they trust you. With our reverse match tool, we can actually help you scan your book of business and identify those borrowers who may be eligible for reverse right now. That means you don't have to start from scratch, and you already have the leads, and we could help you uncover them. For the originator, the value is huge. To get repeat business, you protect your servicing portfolio, and most importantly, you strengthen client relationships by being able to serve them at every stage of their financial journey. That's how you become a borrower's true partner for life.
And frequent listeners of this podcast will have heard me ask this question before, because obviously there's competition, whether you're in the service space, whether you're in the compliance space, whether you're in niche lending products. Why Finance of America?
Well, Finance of America really stands apart for a few reasons. First, we've been in the reverse space for over 21 years, making us one of the largest providers in the industry. That experience gives brokers and borrowers confidence that they're working with a trusted brand that knows how to innovate. Our proprietary HomeSafe products, including HomeSafe Second, which we were discussing, are designed specifically for the older homeowners. They're built to compete with products originators already know, like HELOCs, but with features that are tailored to retirement age borrowers. That means it's easier for brokers to position the product and easier for borrowers to understand and adopt it. The HomeSafe Reverse Mortgage is a proprietary product of Finance of America and is not related to the home equity conversion or the PECM program. HomeSafe products are only available in certain states. Beyond the products, we provide unmatched support. Our account executives act as true partners, walking originators step by step through their first loans. We provide training and tools to help originators have the right conversations. And we streamline the process from application to clear to close so you and your borrower can move quickly. Finally, I like to add that we're a company with a real sense of purpose. Through Finance of America Cares, we donated more than $2.5 million to over 500 organizations. We logged over 13,000 volunteer hours and positively impacted more than 2 million people. We're proud to not just lead in the market, but also make a difference in communities.
Before I let you go here today, any final thoughts? I appreciate you sharing more about HomeSafe Second and Finance of America with us today.
Yeah, at the end of the day, Robbie, reverse mortgages are more than just another product. They're a financial solution that could change people's lives in retirement. They let borrowers access their equity they built in their homes without giving up the security of their home they love. Many borrowers, they want to stay in their home. If it's a 5-bedroom, a 4-bedroom, a 1, it doesn't matter. They want to stay in their home. And for loan originators, reverse creates a path to grow their business, strengthen client relationships, and become a partner for life. At Finance of America, we're proud to be leading the way in making that possible. If you're new to reverse, I'd love to work with you. Email me directly or connect with our Finance of America team on LinkedIn.
Cool, man. I really appreciate the time. It's neat to see how reverse mortgages are reshaping opportunities for lenders and borrowers alike out there. So, Kris, thank you very much, and I'm sure we'll talk soon.
Thank you so much. Thank you for the opportunity.
The National Association of Realtors reported pending home sales for September were unchanged month over month and down 0.9% year over year, as August was revised up 4.2%. Contract signings matched the second strongest pace of the year. In addition, President Trump announced today that he had an amazing meeting with China's Xi Jinping, unveiling a deal that cuts fentanyl-related tariffs, extends the tariff truce, prompts China to resume soybean purchases, pauses rare earth licensing for a year, and includes a plan for a U.S. presidential visit to China in April. Today's previously scheduled first look at Q3 GDP and jobless claims will be delayed due to the government shutdown. Freddie Mac's primary mortgage market survey will be released later this morning, with the prior week's 30-year mortgage rate hitting a year-to-date low of 6.19% after declining 8 basis points from the prior week. Fed speak resumes after yesterday's Fed events, with Governor Bowman and Dallas Fed President Logan both delivering remarks. We begin the day after the Fed meeting and President Trump in Asia, with agency MBS prices worse by 1/8 to 1/4 versus Wednesday's close, the 2-year yielding 3.61 and the 10-year yielding 4.10 after closing yesterday at 4.06%. Let's wrap up with a joke and some housekeeping. A photographer goes to a haunted castle determined to get a picture of a ghost on Halloween. But the ghost he encounters turns out to be friendly and poses for a snapshot. So the happy photographer later downloads his photos and finds that the photos are underexposed and completely blank. Moral to the story: the spirit is willing, but the flash is weak.
Thanks again to Optimal Blue for sponsoring this week's podcasts. Optimal Blue is the only end-to-end capital markets platform built to power performance, precision, and profitability, helping lenders of all sizes operate more efficiently, manage risk more effectively, and maximize results. To learn more, visit optimalblue.com.